All right, welcome to your personalized deep dive. Today we're going to be talking about Target.
Okay.
And, the big question we always have is there stock a buy?
Right.
And we've got this interesting article here from the Motley Fool that's making the case that even though Target's had some struggles lately, this current stock slump that they're in might actually be a really good buying opportunity.
It's a pretty intriguing thought, isn't it?
Mm-hmm.
I mean, especially when you're talking about a company that's, their stock price is pretty much just above their 52-week low.
Yeah.
Like, they're really down there.
Yeah, I mean, we all remember Target's crazy pandemic surge. Their stock was up over $260 a share back in the summer of 2021.
Oh, yeah. Summer of 21. Those were the days.
And then the crash came.
Oh, yeah.
By October 2023, the stock had plummeted to the low hundreds.
It's crazy, right?
It's crazy. And even now, as we're recording this in February 2025, it's barely budged. It's sitting less than 4% above that 52-week low.
Yeah. I mean, that 22% drop they had back in November of 2024 after they released their pretty underwhelming Q3 results, I think that really spooked investors.
Yeah, I think you're right. And it really seemed like Target really miscalculated how long those pandemic shopping habits would stick around.
Mm-hmm.
But this article says that they might be turning things around.
Right.
They point to some improvements they've made in their revenue and their operating margin as a positive sign. So, I mean, how's that even possible with the stock price being so low?
So the thing about a stock price is that it really is a reflection of how confident investors are in the company.
Yeah.
And as we've been talking about, investor confidence in Target is pretty shaky right now.
For sure.
But it's all about expectations.
Right.
Expectations about how they're going to perform in the future. And we have to remember that those positive signs that the article's talking about, those are all pretty recent developments.
Gotcha.
The market is being careful. They're waiting for Target to really prove that they can keep this positive momentum going.
Oh, so it's like they're trying to show everybody that they've learned from their mistakes, basically.
Yeah, it's almost like they're trying to convince everyone, look, we messed up.
Right.
But we're back on track now.
Yeah.
You can trust us again.
So maybe the market hasn't really fully caught on to these improvements yet?
That's a good way to put it.
Okay.
I mean, think about their holiday sales update they put out recently. Total sales were up 2.8% compared to the holiday season in 2023. Comparable sales rose by 2%.
Okay.
And their digital sales, those actually saw a nearly 9% increase.
Wow. So people were still shopping at Target for the holidays. That's got to be a good sign, right?
Definitely a step in the right direction.
But was it enough to really, boost their bottom line?
Well, it did lead them to revise their projections for Q4. They increased their expected comparable sales growth to 1.5%. And they're projecting adjusted earnings per share to be somewhere between $8.30 and $8.90 for the full fiscal year.
Oh, but I bet it's still lower than what they earned the previous year.
You got it. In fiscal year 2023, they earned $8.94 per share.
Okay.
So while they're showing signs of improvement, they're still not quite back to where they were before the slump.
It's a mixed bag then. Target's showing signs of life, but investors aren't totally convinced.
Yeah, that's a good way to sum it up.
All right, so the big question is, do these signs of hope really outweigh all the risks, or is the market being too negative about this whole thing?
That is the question, isn't it? Is there more to this story?
And that is exactly what we are going to dive into next. This Motley Fool article seems to think that this low stock price for Target could actually be a fantastic opportunity for certain investors.
Interesting.
Yeah, the so-called value investors. We're going to talk about why they think that's the case.
I'm all ears. So what's really interesting here is that this article thinks that this low stock price might actually be a classic case of the market undervaluing a company.
Oh, really?
Yeah, they're saying that this company could have a lot of rebound potential.
That's pretty bold. I mean, what makes them think that?
Well, they're basically arguing that the price right now is reflecting way too much pessimism about how Target's going to do in fiscal year 2025.
So are they saying that Target is being kind of unfairly punished for some of their, recent missteps?
Yeah, I think that's part of their argument. They're saying the market's not giving them enough credit for the changes they're making.
Okay.
To kind of illustrate their point. They bring up Walmart.
Hmm.
Do you remember how Walmart's stock dropped almost 10% recently?
Oh, yeah, I remember reading about that. But wait, didn't Walmart have an incredible 2024?
Yeah.
I thought they had like a 72% gain or something crazy like that.
Yeah, they did have a really amazing year.
So why the sudden drop?
It all comes back to expectations, right?
Yeah.
Walmart gave some guidance for 2025 that basically suggested their growth was going to be slower than what investors were hoping for.
Mm.
And as a result, the market reacted, and they reacted pretty dramatically.
That's so interesting because Walmart seems to be doing a lot of things right. You know, their e-commerce business is doing really well.
For sure.
And they've really doubled down on that whole, value and convenience thing.
Absolutely. They've been very strategic about tapping into what consumers are looking for right now.
Right.
And it's working for them. Online sales are making up almost 18% of their total revenue now.
Wow.
But even with all that success, the market is still a little nervous about their future.
So I guess what we need to figure out is Target being unfairly compared to Walmart here?
Right.
I mean, are there situations really that similar?
Yeah. Is it an apples-to-apples comparison?
Or is the market kind of overlooking some of Target's unique strengths that maybe Walmart doesn't have?
That's the big question.
Yeah.
And this article makes a pretty compelling argument for Target. They highlight Target's valuation metrics. For example, they talk about their price-to-earnings ratio.
Okay, and for those of us who maybe aren't, financial experts, what does that even tell us?
Yeah, so price-to-earnings ratio, or PE ratio for short, it's a way to measure how much a company is worth compared to how much money they're actually making.
Okay.
A lower PE ratio can sometimes mean that a stock is undervalued by the market.
Okay, interesting.
And Target's PE ratio right now is sitting at 12.2.
12.2.
Yeah.
What about Walmart?
Well, Walmart's is way higher, almost 3 times higher.
Wow. Okay, so even though Walmart might be expected to grow faster in the near future, Target might actually be a better deal for investors right now.
Potentially, yeah. And then you've got the dividend yield.
Right.
Target's is currently at 3.6%, while Walmart's is less than 1%.
So for investors who are looking for that, steady stream of passive income, Target's looking pretty attractive right now.
Yeah, especially when you consider that both Target and Walmart are dividend kings.
Dividend kings. I like that.
Yeah, they've both consistently raised their dividend payouts for over 50 years in a row.
That's really impressive. But we'd be doing a disservice to our listeners if we didn't talk about the risks, right?
Oh, for sure.
No investment is perfect.
Not at all.
So what does this article have to say about Target's potential downsides?
Well, they do acknowledge that Target stock has been pretty volatile over the past few years.
Yeah.
Which, does make those dividends feel a little less safe.
Especially when the share price is going up and down all the time.
Exactly. When you're relying on those dividend payments, consistency is key.
Makes sense.
And then there's the whole, bigger economic picture.
Right.
Target needs to show everyone that they can handle the ups and downs of consumer spending.
Right, because everybody's dealing with inflation and, these potential tariffs and all that stuff.
Exactly. All those things could really squeeze Target's profits and make it harder for them to deliver consistent results.
So Target's future is really riding on their ability to navigate all these economic challenges. Yeah.
And they're going to have to get better at predicting what's going to happen and, avoid giving investors those nasty surprises like they did last year.
Yeah. They need to prove that they can give accurate guidance and meet those expectations.
Exactly.
It's a tough balancing act for sure.
It really feels like Target is at this crossroads right now.
Yeah.
They're dealing with all this, recent underperformance, and their stock price definitely shows it.
Right.
But there are these signs that maybe they're starting to turn things around.
Yeah, for sure.
And, this really attractive valuation that we were talking about.
Right.
That's making them look pretty good to those value investors. It's almost like Target is this big puzzle, and we're trying to figure out, are all the pieces going to fall into place?
Yeah.
Or is it all just going to fall apart?
That's a great way to put it. And, this article leaves us with a really interesting idea.
Okay.
What if Target's secret weapon is actually their product mix? They've got that combination of those fun discretionary items. Right.
But also the everyday essentials.
The stuff everybody needs.
Exactly. What if that's what's going to set them up for a really strong rebound as the economy starts to recover?
Oh, that's a good point because, if people start to feel better about their finances, they're more likely to splurge on those little fun things that Target is known for.
Totally.
But they're still always going to need those basic things.
Right. The groceries, the household goods, all that stuff.
Yeah, exactly. So Target kind of benefits no matter what people are doing.
Yeah. It's like they've got this built-in protection against, whatever the economy decides to do.
That's a really interesting way to look at it. And that's why, I think this deep dive has been so valuable.
Yeah.
We've talked about Target's recent performance. We've looked at their valuation, their risks, and of course, all that potential upside.
Right.
So now it's up to our listeners
Yeah.
to take all this information and, figure out for themselves what they think about Target's future.
And decide, do they think Target's going to make a comeback?
Or are they just facing too many obstacles?
Ultimately, that decision is up to each individual investor.
Exactly.
But we've tried to give you the facts and analyze those trends and explore all those different angles.
Yeah.
So now you've got the tools to weigh everything and, make an educated decision about what you think is going to happen with Target.
And that's what makes investing so fascinating.
Yeah.
It's this mix of, looking at the numbers,
Right,
trusting your gut a little bit.
and taking a little bit of a risk.
Exactly. So we really hope this deep dive has given you a better understanding of Target and helped you feel more confident about, navigating the market.
Absolutely. And remember, the more you know,
Yeah.
the better equipped you are to make smart decisions.
So keep learning, keep asking those questions,
Yeah.
and keep exploring all those opportunities out there.
Couldn't have said it better myself.
Well, that's all the time we have for this deep dive into the world of Target.
It was a good one.
But don't worry, we'll be back soon with another one.
Looking forward to it.
Until then, happy investing, everyone.